In my last newsletter update, market update for subscribers to my newsletter, Crypto is Easy, I talked about the massive short squeeze that pushed prices up like crazy just a week ago? Not even a week ago. And we're still kind of seeing the dust settle on that move, pushed us up to over $90,000. I wanted to share this snippet where I discuss a little bit of what does that mean and how you can apply that now to some of the decisions that you might be thinking about with crypto, with Bitcoin. So, in our last update, and maybe even the one before that, we talked about preparing for a sudden shift in the direction of prices, seemingly out of nowhere, because the estimated leverage ratio is high. There are some other circumstances that made us kind of rife for a short squeeze, where basically traders get zapped. They bet on the wrong side of the market. Well, they basically bet that Bitcoin's price would drop, but they don't hedge. And so when Bitcoin's price goes up, they have to buy that Bitcoin to close their trade, which would push Bitcoin's price up very fast. And that's exactly what happened. This is the short squeeze. Look to the right of your screen. This is a short squeeze. This is a short liquidation. It's the second biggest since a good 18 months ago, back in April 2023. It's not as big as the as the one we had a little bit earlier this year, but you'd have to go back. I mean, you have to go back to that pump back in, I guess it would be March even, March 2023, to find anything comparable. And you don't see this on like the daily liquidation charts because it took place over 3 days. That's why I applied a moving average. This SMA means simple moving average. And the crazy thing is, if you measure it in USD terms, which I don't, and I'll tell you why in a second, but if you take the raw USD value of the liquidated positions right here, it's on the right, this is the second largest in more than 3 years. It doesn't even appear on this chart. You have to go back into 2021 to see a liquidation this high. The closest we got was back here in October 2022 or November 2022. And even that wasn't as big as the one we just got. And you're asking why I don't do the USD values, because it changes so much. It's hard to know. Like, then you have to do the extra math of seeing, well, what price was Bitcoin at this time as opposed to that time, and what was the liquidity situation, blah, 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 blah. And directionally, it's the same. So you get the same information, a simpler analysis with the same result by just looking at the number of liquidated positions rather than the total USD value. But the bottom line is, this pump, it was artificial. So don't read anything into it or anything more into it than you need to. And yeah, look, you throw in some big entities trying to front run the new administration. You get the celebratory buying from OGs. Oh, we're going, oh my God, Trump's in, we're going to buy some. New buyers worried that if they don't buy now, they'll never get another chance to do so. Institutional buyers or big entities who are like, well, we're going to take a small stake, and they don't care so much about the price. They just want to make sure that they have that allocation. And here you go. And you get this boom that we got. Now, did it have to happen that way? No. Was it specifically because when Trump won the election? I mean, I can't imagine you can find another trigger. It's almost certainly the trigger. And it would stand to reason that that was the trigger. But any event could have done it. Conditions were rife for this outcome. So you might be hearing people say, oh my God, oh, look at the price. It went up. We're still on the weekly chart. It went up. Yeah, let me zoom in on the daily chart. Oh my God, this move, this is wrong. It's evil. Helfman says it was a short squeeze. Everything's going to collapse. We got to sell. We got to short the market. I wouldn't say that. The market wants to go up. We got a lot of healthy churn over the summer. We have plenty of reasons to expect higher prices. Nothing suggests that momentum is fading. I don't think there's anything wrong with keeping a small leveraged short position as a hedge against a market downturn. It's like market insurance. You probably won't make money, but it's nice to know you're covered if the market does come back down. But as a tactical decision to make money, this is not the time to take a short position against anything in crypto. The market can go way higher, way faster than anybody would ever expect. Look at just a year ago. Right? From here, down January 2024 to March, double. Happens all the time. Go back, you can see it many, many times. If you wait for prices to come back down, for this to happen, you get a better deal. So let's wait to see what happens when prices come back down, and then we'll see where we're at. You also have to think about your circumstances. It's beyond the scope of this newsletter, but what's your cash flow like, your age, your time frame, your horizon, how much do you have allocated, how much do you not? There are a lot of things that you got to think about. It is possible that we do go up. Here, let me clear this off. It is possible that we go up, and it's just this amazing 2025. and we come back down. And by the time we get back to $85,000, $90,000, it's already 2026 or 2027. That is what I think would be the worst case scenario if we're just looking at it from the viewpoint of, did I miss it or not? Did I miss out on Bitcoin? Is you have to wait. So realistically, the options are you buy Bitcoin now. If you're lucky and you get your timing perfect, you double your money, double the value of your Bitcoin actually. And meanwhile, there's all this downside. Not obviously, not literally down to $16,000, but you know what I mean. Let's say there's just a downside of 60%, and we come back down into the 40s, the 40,000. I guess that 50%, and we come back down in the 40,000 region where we started earlier this year, which would make a lot of sense. Or if you miss your timing, you might have to wait another 4 years, 5 years, 6 years for another opportunity. And meanwhile, you don't have any cash because you spend it all on Bitcoin here. So that's one option. Or you could buy Bitcoin at $90,000 in 2026 when it's settling and collecting itself for its next move up. And you only have to wait maybe a year or two. Very little chance of a downside. Let's say maybe 40%, 30%, 20% downside. 4x, 5x, 6x, so you get bigger returns on the back end. And the chance to buy the peak macro bottom. It's like buying back here, like buying back here, like buying back here. And all you have to do is wait, set aside money, save money, and you get a potentially infinite investment opportunity. So you can do buy now and get option number 1. Or you can wait, you get option number 2. More upside, less risk. The problem is you have to wait, and that's hard. That is hard. But you got to remember basic rule of markets. What goes up must come down. This happens all the time. You get a big upswing, big downswing. And these things, they can take a while to play out. It's very scary while it happens. Scary because you don't have enough money and you think you need more. Or you put too much in and then the price goes down. But it's just, it's the vagaries of the market. Look at 2016. I'm sure there were a lot of people right here. They were like, oh my God, it's a new all-time, or maybe here, oh, it's a new all-time high, we're off to the races. And boom, crash, 30% down. That set up for the next move up. If you're following my plan, well, I didn't have a plan, but I didn't have a newsletter back then. But the plan is set up so that when this happens, you can catch it. And then you get the next one. If you enjoyed that, please like this video and comment below. Relax and enjoy the ride.